Welcome to the sixth episode of the Euromines podcast. With us today is James Lea-Cox. Welcome, James. Thank you for being with us. Tell us a bit about yourself, what you are doing, whom you're working for, and what your interest in mining is.
Well, good morning, Florian. Thank you for having me. As you said, my name is James Lea-Cox. I work for the EBRD, based in London, and I sit within EBRD's Environmental and Social Risk Management function, and I lead that function for the extractive sector. I've been with EBRD since 2013, which feels like a very long time. And before that, I had a career in consulting, environmental consulting, advising on sort of oil and gas projects, but also mining, both in Europe, Central Asia, and also in Africa. Okay. But I thought, well, let me try and jump the fence, move from consulting to finance, and it's been a good ride so far.
Excellent. So EBRD stands for the European Bank of Reconstruction and Development. What is the mandate of the EBRD?
So EBRD was founded in the 90s, post the collapse of the Soviet Union. It had a real clear mandate of moving to a market economy, rebuilding Eastern Europe and the former Soviet countries. That mandate has changed a bit in recent times. We're focusing on the private sector, seeking prosperity, and we believe the private sector is key for that. It is an IFI. It's owned by countries.
What does IFI mean?
So IFI means International Financial Institution with a development focus. So we are owned by 75 countries, so most of the European countries. We're also owned by the European Union and the European Investment Bank. So we have some heavy-hitting shareholders. And we invest across, at this stage, 36 countries. So this is from Central Europe all the way east to Central Asia, plus Mongolia, the likes of Turkey. We also look at North Africa and parts of the Middle East. And as of this year, we're looking to move further south to 6 sub-Saharan African countries and Iraq. So our geographical focus is expanding significantly. Wow. And various sectors, lots of finance, but the key one is mining.
And also very interesting jurisdictions.
Indeed,
working in.
Indeed. Challenging ones as well sometimes.
So what role does this extractive industry play in your portfolio at the EBRD?
So look, we have quite a bit of experience in mining. Like we've been doing it for 30 plus years. I understand, looking at the books yesterday, we've invested, I think it's just over 3 billion in that time in about 70 projects. Okay. Our current portfolio is about 1 billion in about 30 projects. So it is a sector we have been involved in for quite a long time. But there's a heightened interest. There's a push for supply chains. There's a push for certain metals and materials. And we are key. Well, we've convinced our board that we are key to investing in these projects to make this happen.
And what is the motivation behind it? I mean, you're not investing into mining for the sake of investing into mining.
No, well, look, I think we have a development focus, right? And every project that we invest in has to have a sort of a development mandate. I mentioned the private sector focus, and we believe the private sector is key to that. But if we want to support sort of a green energy transition, we want to support a future digital economy, you need critical raw materials, you need metals, you need minerals and other materials. And at the moment, this sector, particularly in Europe, and particularly the countries we invest in, is starved for financing. It's seen as high risk, and we want to change that.
And you want to change it. So why you are investing then in Europe?
Well, we invest in all our countries, but there is a focus in parts of Europe. The reason for that is that we have a lot of experience in Europe. We've financed quite a few mining projects. We understand the jurisdictions. We also understand how you can manage risks and ensure a responsible mining operation in Europe. The other thing is that there's a push in Europe for supply chains, security of supply, diversifying supply chains, maybe bringing it closer to home. And we're key to, we believe we're key to supporting that.
Okay. And what kind of projects are then specifically interested in? Is it only the materials that are needed for the energy transition, for the sustainability transition? Is it only critical raw materials? What kind of projects are the ones that EBRD is really looking into? When does it get
Well,
interesting?
maybe
for you?
we have a mining strategy.
Yeah.
So we spent quite a bit of time actually last year putting together a 5-year strategy for how we would invest in the sector. And it took a lot to convince our board of this. There was a huge emphasis on environmental and social risk management and improving capacity, and of course a focus on critical materials. So there's 4 pillars really, which is guiding our investment. The first one is critical raw materials for a green energy transition and a digital economy, so lithium, things like that. But we also finance other types of metals and minerals. The second is addressing shortcomings in terms of environmental and social risk management, not just within companies, but within governments. We're looking at decarbonization of the sector. So that could be new projects. It could be existing mines that need to reduce their carbon footprint. So we have projects looking at, say, installing wind farms, solar panels, reducing energy efficiency.
Okay.
And then the last part is looking to see how we can do policy dialogue with governments to make the legal framework more attractive to investors, both local and foreign investors, and then increasing things like transparency, environmental and social frameworks, etc., etc.
Okay, so you're really working in the machinery of turning mining as a force for good for the country you're invested in.
Yes, I believe we are. And maybe if I could add, Florian, so we say mining, investing in mining, but it's not just we want to build greenfield mines. We have a lot of existing mines that need capital to expand or increase their efficiency or their production. We have mining services companies who need capital and investment, who are working on these projects. I mentioned the decarbonization part. And we're also looking at a lot of remediating legacy mining activity.
Okay.
So in many parts of Europe, particularly Central and Eastern Europe, there's this legacy of mining, and it hasn't really been cleaned up. So you can go to many parts of these countries and you can see massive waste dumps, tailings facilities which haven't been quite designed the way they should have been or closed. And there's a huge amount of value in those tailings still, because processing technologies back then weren't as good as they are now. And so we see quite a few companies looking to reprocess this waste.
Okay.
And for us, that's interesting because you're not creating a new mine, but it's also an opportunity to address a legacy waste issue and close and remediate a site a lot better than it was done in the past. It's not to say it's easy. I make it say, we can just do this quickly. It's not, but we're certainly looking, and we have a few projects. We have had some success in that regard.
Okay. Well, secondary mining is a very, very big topic. We're also
It is
looking
indeed,
into. Could you give us an idea how many greenfield projects versus how many brownfield or repurposed projects you have in your portfolio at the moment?
We have I can't give you numbers, but we have quite a few. A lot of them are greenfield.
All right.
And we have probably 25% equity in some of these projects. We're doing a lot more early equity, and perhaps we could talk about that. In terms of the remediation work, I think at this stage we have 1 or 2, but there's a look to do more. It is complicated because it's like, who owns the waste? Who owns the tailings? And what liabilities would our client or investee take on? So there's quite a bit of discussion about how that would work, and then legal systems, which is where the policy dialogue comes in. How do we make this appealing for companies to invest?
So what sets you really apart is like this very holistic view that you have in your strategy, I would say. It's not just a business case, it's for some much higher, greater good.
Well, that's a nice way of putting it. But yes. If I look at EBRD's business model, it's not just finance. We've got this development mandate, right? So we provide the finance, we provide a huge amount of advice and capacity building and support to our clients, whatever the sector, mining or otherwise. While we do look at the private sector, we still do some stuff with governments, and there's a lot of support and advice there. And the third part is this policy dialogue. So we're going beyond just investing in a project or lending money and then just stepping back to see what happens. We are there to sort of, as a long-term partner, we want to, I don't want to say handhold, but sometimes we do, and provide guidance and support. And what we really try and do in the mining sector is these projects have a very long development time frame, sometimes 10 years, if not more. How could we fast track that? How could we reduce it? How could we unblock those things that are blocking the process? And a lot of it is on the social side, on the environmental side, and the policy side. And so how can we help a company or whatever it may be trying to address those and address them well so you can actually develop your project?
The ESG angle is very important and in how you choose or how you structure a project, right?
It's a key part of EBRD's mandate. It's written into our founding agreement. The language is like sustainable finance and things like that. But when we look at the mining sector, we look to support responsible mining.
Not any mine that you support.
Yes, we don't just support anything. So we as a bank, like many development banks, have a set of environmental and social standards. We also have governance standards on things on integrity. And we apply those to every project we finance.
What are these criteria when we go through?
Well, the criteria. So if you look at environmental and social, so let's start with environment. It's basic things like understanding what your environmental impacts and risks are, how you assess them, how you mitigate them. Looking at things like water, contamination, biodiversity, basic ones like health and safety, which some people take for granted. The acquisition of land and potential impacts on landowners or people who use the land, whether it be, say, grazing animals, and what could this mine do to affect their livelihood, cultural heritage, and then a very important one is community and stakeholder engagement. And this is where projects tend to fall down.
Right.
They don't want to spend the time to engage with local people, but those local people can block your project. And this is where we get these projects stuck because people locally don't want to support it. The government then is nervous, doesn't want to issue a permit. So how do you rectify that? So our focus is to try and get that engagement and information disclosure and transparency in place early on and to build it up through the project life cycle.
And how do you do it? How do you as EBRD do that? Are you stepping in and telling companies what to do, or do you set up consultation mechanisms by yourself? What is your role in this?
So it really depends on what sort of project we're looking at. But say, for example, we're looking at an early mine development, say the feasibility stage.
Yeah.
We would support and advise the client on how to start a dialogue locally, how to do it in line with what our standards are. And this is all about transparency and information disclosure, allowing the public to raise concerns and to be listened to. And it can be incredibly complicated. It's not just a matter of telling people we're going to build a mine. It's listening to hear what they think about it. They're going to raise concerns as you'd expect.
Yeah.
And then how can we work with the community to understand what those concerns are and how we can respond to them? So we've got quite a few examples of where projects have got stuck with this community opposition. And it could, well, the example I have is it was about footprint, how big the mine was, about the process technology. There was a plan to use cyanide, which is quite an emotive word. People are nervous about it.
Yeah.
And water.
Okay.
And rather than saying, well, we know what we're doing, we can just build this project, don't worry, everything's fine, the mining company went away. We discussed with them, how could we adapt this mining project to address those 3 points? So in the end, they took out cyanide, which is a massive win. They reduced the footprint substantially, and they changed the design to be a zero discharge mine. So trying to contain all water on site and not to really put pressure on local reserves. And these key sort of, not really an offer to the community, but we're listening to you. We have modified the project to respond to this. What do you think?
We take you seriously.
Exactly. We listen to you. And that dialogue, which took quite a while, as you can imagine.
How long?
This took a few years.
Yes, yeah.
But you went from a project where you're being chased out of a village to a project where you are a key part of the community.
Yeah.
So it's worthwhile spending the time. And we have I sit in a department which is 50, 60 people. Yeah. We have specialists for a whole range of topics. And we work with companies, advise them, support them. And if we don't have the expertise, we bring in consultants and offer that support to a company. So It's a lot of advice and support.
Okay. So what is more important, the equity that you are providing or guarantees that you're providing to projects, or the advice and support?
Both are important. We're still a bank. We still have to make. We still have to make a return.
Yeah.
And if we look at a project, and like, oh, do we want to invest or do we want to lend money? We go through a whole bunch of due diligence, as you can imagine. Now, obviously, financial is a key one. Does it make sense? What is the risk to us? And I think particularly in the EU, there's a move towards more supporting mining, particularly for critical raw materials, and an offer of potential guarantees. So, for example, EBRD is an implementing partner for InvestEU.
Oh, yeah.
And so we can access guarantees to support projects, and they've recently extended that to critical materials. So that helps us de-risk the financial side.
To drive down the capital costs for
the cost of capital, the potential of losing it, or things like that. So, and then we're looking at things like environmental and social. We're looking at legal, know your client, integrity issues. So there's a whole range of issues that we look at to decide whether a project makes sense. And then, of course, we have the development mandate.
And the criteria that you're applying then when you are doing your due diligence, when you're assessing the projects, are they coming from certain standards, or have you developed them in-house?
We have our own environmental and social policy. So we updated that. We have a 2024 policy now. It's very different to the one we had in the 90s, put it that way. It took a long time to get social into that. It always used to be just environment, but there's been quite a bit of evolution, as you can imagine. So we have that. We also appreciate that there's a huge amount of standards globally on mining. In fact, there's way too many. And there's an initiative now to try and consolidate those into one standard. And that's under consultation. And there's certain sector guidance, like for gold mining, the copper mark for copper, you've got a global tailing standard. And so while we apply our standards to all projects, we pick up that best practice or good international practice from elsewhere and apply it. So if we had a client with a large tailings or waste dam, we'd expect them to meet international good practice on managing those facilities.
So it's the GSTM standard.
The GSTM, we would accept equivalent, but that's the expectation, particularly because you've had these tailings dam failures in recent times. So we apply our own, we apply industry standards, and we held our clients up to that high standard. And it's important for us.
So at what stage do you start looking at projects? When could project promoter knock at the door at EBRD and asking for support?
So technically at any time.
At any time.
In
also
the project lifecycle,
for example.
But I would like to highlight that mining companies are struggling, particularly in the country that we operate in, to secure finance at the early mining stages. So the exploration, the pre-feasibility, the feasibility study stage. And there is a gap in the market. If you're elsewhere in the world, say North America, you have a far better chance of securing that early investment. But where we invest, it's particularly challenging.
Why is that?
I think the concern is mining is risky. Mining has a bad reputation. Mining has a legacy. And I think some investors or lenders have maybe had a bad experience or seen other banks have a bad experience. And I know many just do not finance mining. But we've identified this gap at the early stage. And last year, we put together what we call the JUMP framework, which is a junior mining program. And we have an envelope of money, 150 million euros, to invest equity at that exploration stage.
Okay.
Now, you can imagine from a financial perspective, that is high risk, right? Or significant returns. So we bring our business model into this. So it's not just investing. It's not just giving a client 10 million to finance a feasibility study or to do more drilling or excavation. We bring with that advice on ESG. We bring with it the advice on technical matters and obviously support in navigating the country's system. And so we want to try and start early to bring those companies up to a world-class mining project in terms of performance and standard. And if we start early and we take that risk early on, we can really do that.
And how is it accepted by the market?
It's been received well,
Yeah.
but we don't have many projects like this because it's from last year. But
Right.
we have in the past invested in equity at an early stage, and we've had some successes. So in Czech Republic, for example, we are invested in a project that is reprocessing tailings for manganese. We also invested in an underground lithium project, Sinovic, for example.
Yes.
And they're at their sort of impact assessment stage. They're going through the national permitting, and then they'll go through what we require, which is the ESIA, the Environmental and Social Impact Assessment. And they're also a strategic project in Europe for critical materials. So those are some successes. We have others in Bosnia with Adriatic Metals, which was an early equity. And that mine went through the construction period, which was challenging in some respects, but it's now operational. So we went from when they were looking to finance further study to see if the mine was feasible to actually building and operating the mine. And we're still a shareholder. I think the appeal is there, and we're hoping that other investors would follow suit. Because sometimes we see ourselves as an anchor investor. We give comfort to the market. EBRD has high standards. We don't cut corners. We have a high level of expectations from clients, and we support them. So when other lenders see that, they're more than likely to join us or follow suit or invest or provide debt financing, for example.
Okay, so you take on a lot of risk, you do your due diligence. It's EBRD who is checking if all the T's are crossed and all the I's are dotted of a project in the hope that further private finance can be crowded in.
Yes, exactly.
Okay.
So it may be a small amount of equity, right? You can't build a mine for 10 million euros, but you can finance the studies to prove that you can build a mine. So when you come to the point of we need to raise money to actually build it, that's when you're looking at the tens of millions or the hundreds of millions. And if you have an investor like EBRD who set those standards, and many investors are looking for those standards, it's easier to attract that financing.
And do you see in European capital markets there's a change of attitude towards mining? Like, is it becoming easier at the moment with the Critical Raw Materials Act, with all of the...
I think slow. I think it's changing.
Okay.
We have got some projects in Europe, say Greece, for example, Eldorado Gold. We are an equity investor in Eldorado Gold to support their copper gold project, the Skouries project. It's a big open pit project. And that wasn't early equity. That was equity to actually build a project. And we did a huge amount of work on environmental and social issues because in some ways, parts of that project were blocked locally by communities and the like. And we worked very closely with the company to go beyond what permitting required. So we went beyond EU standards. We spent a huge amount of time on the social part. The company spent a huge amount of time on moving from traditional tailings technology to GSTM and dry stack, reducing the water in that. So they spent a huge amount of effort to responding to issues. And when it came to securing finance, I think because we were involved, other banks took comfort, banks who had no experience with mining and maybe a nervousness, but felt that we were in there to give some assurance.
Sort of like a seal of excellence by EBRD somehow.
Oh, you could call it that. I'm not going to say it
like that. Let's call it like that.
But at least it sends a message, right? That we will spend the time, we will monitor, we will support, and when things go wrong, we will work with the client to fix it.
Okay. Now you mentioned InvestEU. We also mentioned already the Critical Raw Materials Act. So there is more and more money becoming available, like in terms of guarantees, and the EIB is one of your owners, right?
They're a shareholder, yes.
Yeah. Where do you think the space is going now at the moment? Is it becoming easier now to access finance from the EU? Do you think also EIB is changing a bit its attitude towards the raw materials extractive sectors?
I think generally in Europe there's a change. I think it may become easier in the future to secure finance, but it's still early days. We went from we don't want mining in Europe to we need raw materials. How do we get them? So I think with the initiatives from the European Union and the Commission, it will certainly support access to finance. But at this stage, we're still seeing gaps.
All right.
And that's what we hope to address.
Okay. So let's say I have a project and I come knocking at your door. How does it work next? So you're asking, I assume, for a lot of documentation.
If you came knocking on our door with a project, say you came at the early equity stage. Say you had done a scoping study, you had maybe done a pre-feasibility study, you had acquired a huge amount of, say, resource information, you had done some exploration. The first thing we'd look at, sort of, do the fundamentals make sense commercially and financially? Then we'd look at the management team. Who is the management team? Do they have experience? Do we believe in their ability to deliver this project over the long term? And then we start asking questions about environmental, social. We look at where they want to develop it. We want to understand what the sensitivities are. If they come and say, oh, this is in a Natura 2000 areas, it's a red flag already. It's not impossible, but you can understand, look, there are certain sensitivities here. You may affect a community. You may affect biodiversity. So we try and screen those issues at an early stage. And then, of course, we're looking at things like know your client, integrity, legal. And if we can reach agreement on all of that, and obviously a commitment to meet standards, then there's a strong possibility that we would invest and provide finance.
Okay.
The one point I didn't mention, which is important, that there needs to be a resource in the ground, right? and you need to have understood it in a way that meets sort of international standards.
All right.
So you can't just say what's there.
So we're talking about JORC or Crisco.
Things like that. And obviously there's different levels of confidence in the resource, and that links to where you are in the project cycle. So if it's at a very early stage, we don't expect the world, but you need to have done some work to know it's there, and you can further explore it. And we would support further delineation of the resource, further exploration.
Yeah. Okay. And then you are investing into it. You're partnering up, essentially, as you mentioned before.
Yes.
And then you become a shareholder of this project or of the company.
Correct.
All right. And this is your business model.
Yeah, we become a shareholder. We won't be a shareholder forever. There will be an exit point. But the exit point would more than likely be once the project is operational. We may sell out parts of it over time. And that's because of our development mandate. We want to get there to help develop the project.
Do I get it right that EBRD is optimistic about mining in Europe and access to finance to mining projects in Europe now in the future?
Yes, I would say we are.
Yeah.
We want to finance them. We want others to finance them. There's a huge demand for raw materials. We want to build wind turbines, solar plants, electric vehicles. Where's it coming from? We want to understand the risks in the supply chain. And if we can be involved in that, all the better.
So EBRD working hard to get the private sector into mining finance. Wonderful.
Correct.
Thank you so much.
Thank you. Thank you for having me.
Thanks.